I think that what we're seeing right now, right, there are definitely some anniversary blues. Q1 2021 was a very hot year. And so we're not going to see that anniversary this year. And that doesn't mean that these stocks are necessarily doing poorly. It's just that they were on a run to the moon, and now they've started to float back down to earth a little bit.
The 3-month look back at how companies have performed, that factors into the daily stock move, and how much in your view? Because those, obviously those numbers we're looking at right there, I don't know how much of that is based on it's based on, the pandemic plays no longer are
look, the stay-at-home trades are over, right? The Pelotons and Netflixes can tell you that in painful detail. But, you look at the last quarter, there are things like Alphabet where, they didn't do poorly. They just didn't do great. But that was largely because of there's, advertising through YouTube slowed down because there's a war happening in Russia, right? So do you think that that's going to keep happening? No, unfortunately, as the news cycle moves on, the advertising dollars resume on YouTube. And then when that happens in Europe, next quarter, I think you're going to see some really different numbers from Alphabet. So I'm bullish on Alphabet. I think that you have to look at the quarter, you have to look at the reporting, but it can't be the only thing you look at. You have to look at these companies holistically.
So you would actually, in certain instances across technology, you would be selling some rallies, but buying some dips, depending on which name you're talking about?
Absolutely. FANG is not a monolith. Tech does not happen in lockstep, right? So if you're bullish on Peloton and Netflix long-term, their 52-week lows might be a good place for you, right? I think Alphabet is underpriced right now, relative to its performance after its earnings release yesterday. And I would definitely look there. And, I think the other places to look are social media in general, right? We can't get through a segment without saying the 4-letter E word. Elon bought Twitter, and that means that there's going to be a lot of renewed focus on social media. And we know that billionaires love to buy media companies. Right now, social media is the new newspaper, right? Snap is under 50 billion. Maybe somebody gets excited and makes a play there. I think that there are a ton of interesting tech stocks that are off their highs, but still really interesting to look at buying.
Amy, the Dow's down 10 from its highs, S&P 13, NASDAQ 23. How should they correlate? We know that the NASDAQ went up a lot more, so maybe it comes down a lot more. But what should we expect in terms of relative performance for those three indexes? Are they going to catch up with the NASDAQ, or NASDAQ is, just comes back and gets more in line with where the S&P and Dow are?
So look, historically, correlations were much higher pre-pandemic, and the correlations have been breaking down. That's partly because factors have gone in different directions, right, Joe? So value's done one thing, while momentum has done another, stay-at-home has done one thing, while reopening has done another. I think that continues to break down. But there are some core pillars that might make a catch-up possible. One, I was thinking about Google from yesterday, is they also announced buybacks. That's been a core theme. When you start to see that happen, that artificially puts a floor on some stocks, that can kind of make those correlations go back to one that is higher and more on the upside.